I'm Jayson Reed, joined here by my co-host, Baran Pourtahmaseb-Sasi, and you're listening to the Panther Business Briefing. For today's much-anticipated fifth episode, we'll be resuming our coverage of residential housing in the U.S. with an interview with Professor Marcos Kerbel. Here it is. I'm sitting here with Marcos Kerbel, a professor at Florida International University, specializing in banking and financial services, with a particular focus in international banking. He holds an MBA from Georgia State University, along with a CFP and CPA certifications. His unique perspective comes from decades of experience as both a senior banking executive and an educator, having witnessed firsthand many pivotal events in Florida's housing market and banking evolution. Professor Kerbel currently teaches courses in finance and banking while serving as a consultant on banking compliance issues. Professor Kerbel, is there anything more you'd like to add?
That's fine. That's too much already said.
Too much
Thank
already? Well, I guess we'd like to start off going off of your biographical, context. Could you tell us, where you came from and how you ended up in South Florida, Miami?
Okay, I was born in Cuba, and I had a pretty nice, let's say, childhood and beginning of my adolescence until Castro came to power in 1959. And then I was beginning my adolescent years. And then by 1961, there was an exodus of Cubans out of the islands. And there was an operation called Pedro Pan, or Peter Pan, depending. We call it in Miami Pedro Pan. In Cuba, they call it Peter Pan, where 14,000 plus kids came out of the island alone without their parents and were sent either to different places. Many stayed in Miami in camps, or they stayed with relatives, or they stayed with friends. I was sent to Los Angeles to foster homes, and I was there for about a year and about 13, 14 months until my uncles arrived. They claimed me, and then my parents arrived, my brother arrived, then we resettled in Atlanta. That's where I finished high school at Henry Grady High, and then I did my bachelor's and master's degree at Georgia State University while I was working for an accounting office.
Amazing.
All right. Well, one of the first questions in terms of the historical aspect of our theme today, which is residential housing, we'd like to know if you could share with us a little bit of insight into the role of federal housing agencies in shaping mortgage lending practices back in after the FDR administration and a little further on.
Okay, since I'm a baby boomer, I would say that I started realizing that the policy of the United States government was for everyone to have their own most important asset, which is their home. And a lot of these plans started right after World War II, when all these veterans started coming back to their homes. And I think it was an excellent policy because it allowed individuals to buy a home and be able to grow their families in it and build equity while they were paying down their mortgages. And that allowed for an expansion of the cities, because now many of these homes started to be built in suburban areas where the land was cheaper and where there was more space to be able to grow the families and be able to have backyards and to have pools and all these amenities that you can have in a home today.
All right. And I guess another thing, and we alluded to this earlier, could you speak about the expansion of the United States highway system, and especially the I-95 corridor specifically?
Yes, it's interesting. I basically experienced the building of I-75 and I-95. I remember when I used to come from Atlanta down to Miami to see my parents, that there were sections of I-75 that were not finished, even parts of the turnpike that were not finished yet, and we had to get off on Star Road. I remember one time going through a town by the name of Perry, Georgia, where I had a Pontiac, which I no longer manufacture, 85, and the car got overheated. So we had to find one of these small towns, a mechanic, to fix it, to continue on our trip down to Miami. So I still remember that when I started my banking career in Miami in June of 1969, the last part of I-95, which goes from, it's now 112, the one that goes to the airport, to Miami Beach, that goes from Mount Sinai Hospital to the airport, that section until downtown, it was not finished yet. So you had to get off and then go through Biscayne Boulevard for me to be able to go downtown to work at Pan American Bank, which was the bank I started my banking career at.
And building off of that, I guess one of the things that we're interested in is if you could speak on the earliest developments in the 1970s that really led to the modern Miami that we see today.
Okay, what we have to understand is that prior to 1961, Miami was considered the gateway to heaven or to hell, depending on the type of people that came down, right? We have great people. We also have some names that history has, pin on us. But most people that used to come to Miami, they came to Miami on vacation or came for retirement. And the summer was basically kind of most hotels what you could get a lot of good rates in the summertime because it was kind of empty. So, but we got to remember the migrations. The first one is the Cuban. That started right after Castro started, after Bay of Pigs in 1961. So a lot of the Cubans started leaving, and where was the first stop was Miami, and they preferred to remain here, even though many went to New York and some went to Puerto Rico, went to other countries, but Miami was a primary place. Among those groups of individuals who were in the banking industry in Cuba, and those individuals realized that one way to start growing Miami was through the banking sector. How you do that? Well, some of these countries' governments were beginning to turn left, and there were beginning to be concerns that there would be the communism that was starting in Cuba was going to spread throughout the hemisphere. So some of these bankers, and I later on, joined the club. We traveled to these countries and tell these people, hey. We know you love your country, but prepare in case something happens. Don't let it happen to you. What happened to the Cubans? They got caught very quickly, totally unexpected, and they had no money abroad, and they had to come. They lost everything because everything was been nationalized, confiscated, and they had to come penniless and start from scratch in the United States. So we went through that, and that's how Miami started growing. In the 60s, there were few banks. Here, most of these banks now don't exist anymore. They were sold or they were merged. But then something interesting happened that these individuals who were coming first on vacation, these Latin Americans, started bringing in their money. Then they started visiting more frequently, and they started buying condos, or they're buying homes. And then we see how some of them started sending their children to colleges in the area. So this is all the growth. And at that time, many of the savings and loans that existed at the time were able to finance many of these condos for many of these families. And, more and more people came. And then later on, I'm thinking right after one area that we started seeing more Europeans coming in was after 2000 when the euro came out, was launched. And then the euro one time hit about $1.60 to the dollar. And they came out about 117 in 2000, and then it went up to about 160. So a lot of these Europeans found a way to come to Miami and also start investing. So we have Italians, we had Germans, we have and now it's interesting how you go to Miami, the different areas, the different enclaves that you find.
Right, sort of.
So if you start from, for example, from the south of around FIU, what do you find? Well, you had a group of Nicaraguans that are here across the street in Sweetwater. This was a Nicaraguan enclave after Somoza was deposed and the Ortega regime, came in, and Sandinitas came in. And then you have now Doral, which is known as now Dorazuela, because the enclave of Venezuelans. And you have an enclave of Colombians in Key Biscayne. And you have an enclave of, you go to North Dade, the areas of Sunny Isles Beach and Aventura and all that. You'll find several languages that are spoken there. You go to the Aventura Shopping Center, and you'll hear Spanish, you'll hear English. English you probably hear the least. You'll hear English.
There's some French too.
You hear Spanish, you hear French, you hear Russian, you hear Ukrainian, you hear Hebrew.
Yeah.
even probably Arabic too. So it's interesting. And I remember because I was in the banking industries, and it's hard to really believe how time quickly passes. That a few days ago, it will be 30 years that the bank that I headed here in Miami, we decided to move it to Aventura. And at that time, Aventura wasn't even a city. Aventura was part of the county, and I remember going to the building that we selected to negotiate the lease with, and I went to see the prospective tenants or neighbors in the building, and I was asking for their business cards, and it was interesting how some of them said Miami, some of them North Miami Beach, mm-hmm. Some of them said just Aventura, even though Aventura was not a city yet. It was just like calling Kendall today.
Exactly. Forward thinking.
Yeah, so it's interesting, and then the city became. That area it was unincorporated became the city of Aventura because one of the issues, if I remember correctly, the literature was that the people of Aventura complained they were giving about $13 million of taxes to the county, but they were not getting enough services for the kind of money they were paying. So that's why they decided to
separate.
The same thing happened then later on with Sonny Isles Beach.
Yeah.
So it's interesting how things were developing over time here in Miami, and so we have a mix that to me I'm very proud of the fact that I'm teaching at FIU, where not only we have a global faculty, but also that we have students from 140 countries. So and some of these students that are here, their parents bought real estate in Miami.
Sure.
So they're staying in those units. So it really was the fact that in 1977. We have to thank a lady who was a visionary by the name of Elaine Bloom. Elaine Bloom was a representative. I think she was the second woman representative in the state of Florida that filed a bill to allow for international banks to come into town. And that bill, the first year she tried it, was not successful, but it passed in 77, effective January of 1978. And she was in the House, a representative, and Senator George Firestone was the one that put the bill in the Senate. It passed, and that allowed for state of Florida to allow international banks to come into town. Now, these banks brought in their customers. These banks, many of them were from the first licenses were given to Israeli, Canadian, and European banks, and they grew. As a matter of fact, they helped downtown. Many of you probably you're too young to remember, but there were two buildings going up at the same time. One was which was being built by First Federal Savings and Loan Association, which was the first savings and loan in the country. And then next to it was being built the Biscayne Towers. Now the First Federal building, which then later became AmeriFirst, that building was built, and it was very strong. I remember the noise from building the pilings to build the foundation. It took about 6 months, and it filled up pretty quickly from tenants, right in downtown Miami on Southeast 3rd and between Flagler and First. And then next to it was being built the One Biscayne Tower, which they were building it on floating floors, if I remember correctly. Anyway, so if you look back to those articles, you'll find that because they both came out on the same time, and then in '76 there was a recession in Miami and Florida, or in the country, with the REITs, with the Real Estate Investment Trust. That second building, One Biscayne Tower, was basically empty. When it was inaugurated, and it had 500,000 square feet of space, and there was only one store in the first floor. It was, I remember, Norman's Boutique, which was a Guayabera store. And then, many of the floors were empty. Two banks wanted to get into that building, and interesting was that Southeast First National, which was across the street, wanted to go into that building to put their computer systems. There were those mainframes back there, but because of the floors, the way they were kind of floating, it was too heavy for the other equipment of the time. On the other hand, Pan American Bank, which was a competitor across the street, wanted to go in it, and they wanted to put the sign all the way on the top. Mm-hmm. And there was an issue with that one too, because then there was a conflict with First National. So neither one went in, the end result was that the bank went bankrupt. The building went bankrupt. It was built by a Puerto Rican group, and what saved that building was the fact of the international banking legislation. That the first bank came in. For example, I remember going to the inauguration of Banco do Brasil, which took the penthouse of that building. So after a while, those first banks that came into downtown, and then they started expanding into Brickell. So that's
this desire to open Miami, South Florida in general, right, to foreign investment, development, these kinds of things. What was the main motivation to basically create Miami from the 60s into the path of what it's become?
I tell you, because I knew some of the leaders involved, including one of them being Dr. Felix Reiler, who was one of the architect of turning Miami into an international banking center. He was a believer that the bigger the pie, the better it was going to be for everybody else. And I remember conversations, people that had with him, they said, he had a pretty good business going on at Pan American Bank. And I remember that what the study was that with 10% of the staff, the bank was making, from the international division, which we were in, 51% of the net income of the bank. And people say, why are you giving up this, this nice thing you got going on for you? And he kept saying, no, the bigger the pie is going to be, the better for all of us. So this is why people go to London. This is people who go to New York. They don't come to Miami, especially if they speak Spanish. So he was the first one, even before this law was passed, that he still started going to Latin America. And he said, come to Miami. We will do all the banking necessities that you need in your own language.
So the idea was Miami would become a hub for
and today,
Western finance, Latin American finance.
And today, Miami, I think, is the 10th largest global banking center. It's not a financial center yet because we don't have a lot of the elements that are required to be a financial center and have a lot of investment banks here.
We could get into that conversation later because I think that's the general intention as people communicate for the city of Miami is that it's going to be the next Wall Street of the southeast coast. So
if you go through through Brickell Avenue, you see, and it's come to a point that it doesn't matter if you're coming from the north to downtown and to Brickell, especially, or you're coming from here, from FIU or from any area, even at 10, 11 o'clock, there's quite a bit of traffic getting into that. And I don't know how they keep building these large buildings there, but that's what it amounts to, right?
And sort of speaking on that era, could you talk about the role of the Florida International Bankers Association in its early days in kind of making that come to life?
It's very interesting because, again, as part of this thought of making Miami large, an important center, again, Dr. Reiler was very keen on the unity of the Americas. In 1969, just a few weeks before Neil Armstrong landed on the moon, he had a mural developed at the bank, the Pan American Bank, that had basically all the countries of the hemisphere. And then at that particular event, which was presided by the then General Secretary of the Organization of American States, Gallo Plaza, he basically said that Miami is the city where the cultures and the economies of the Americas unite. This is going back to April '69. I was finishing school at the time, so I joined the bank some months later.
Very exciting time to get involved.
So I have the pictures and all that because it was a part of the history of the bank. And he basically, one of the things he did was that he teamed up with the Federation of Latin American Banks. The Federation of Latin American Banks, which is headquartered in Bogota, Colombia, is the association of all the banking associations in Latin America. So he used to go to the conference and he started talking to the secretary, general secretary, they call it, to bring them to Miami, to bring one of their events to Miami, which he's able to do in 1976. But then he said, you know what, we need our own specialized association. And even though the Florida Bankers Association had an international banking committee, which he was a member together with other bankers, they said, no, we need, and they were headquarters at the time in Orlando, and then they moved to Tallahassee. He said, no, we need international banking in Miami to be a specialized. I mean, we'll collaborate with others, but we'll be based here.
A main meeting point.
Yeah, and so we created FIBA on July 6, 1979. So the association just celebrated its 45th anniversary. And one of the things we just did a couple of weeks ago on October 24th, which you're aware, is that we have, at FIU, we have scholarships for needy students who are juniors and seniors, who are in business, major in accounting, finance, international business, so on and so forth. We have scholarships up to $7,500 a year. So we've already started this back in. He died in 1993. So at the beginning, it was given to the Miami Foundation, but then we realized, you know what? Why don't we just bring it to FIU, and then we can really have more impact here locally. So that's what we've been doing, and we just renewed the contract on October 24th for another 5 years. So
Scholarship?
yeah. So they're $15,000 a year, and then so there's a whole, and in order to maintain the integrity of it, the selection process is done through FIU, and then the voting members of the finalists as the chair of the respective departments that are
Be able to determine who
so
awarded.
So FIBA stays out of the dynamics of politics, or whatever you want to call it.
Yeah.
Could we take a step back and to say the 80s and 90s, where you see the context that necessitated creating legislation to combat money laundering? Because that's one of the big areas that you...
Well, I lived through all that.
Right.
I lived through the days of Miami Vice and all that. But let me tell you how the whole thing starts. In 1970, the Federal Reserve Bank of Atlanta opened a branch in Miami. And and a lot of transactions that before used to go through the city, I think it was Jacksonville, the only branch before, started going through Miami. And at the time, remember, money laundering was not an illegal activity. It wasn't even a legislation dealing with money laundering. And what was happening was that all of a sudden, after about 1978, so more or less, they started noticing, the Federal Reserve, that Miami had an excess of about $5 billion in the Fed, which was out of range with larger cities that didn't have so many reserves. So, as I said, why is this occurring? So we have to go back to, and this is when I teach this, I point about it, is that in March 22nd, 1967, the Republic of Colombia passes a legislation or decree called Decree 444 that prohibited Colombians from having accounts outside of the United States, or outside of Colombia. And any dollars they received, they had to go through the central bank there and sell it. Now, before the Cuban started coming to Miami, my understanding is that the Colombian enclave was the largest of the Latin American groups. Okay? They and the Puerto Ricans were the two largest groups. And so what happened is that many of these individuals in Colombia who were in the cambio business, exchange, many of them were small ones. They would, and even some of them were customers of the bank. I know them. The family would send money down in traveler checks. They would send them in money orders. They would send them in, cashier check. They would buy it there. Then they would bring all those deposits and put it for the bank. And they were smaller, they were $100 things. So anyway, when Colombia started tightening up, these individuals now became brokers, cambio, in Miami. And they were doing is they were taking the money, and now by that time marijuana started picking up, and then drugs. So they started they were not directly involved in the actual drugs, but they were involved in the cambio. So they were getting the money from the sales of narcotics to the kids in the country. Money was coming to the accounts here in Miami, and then they would do the exchange because they needed the pesos in Colombia. So they formed what was originally Operation Banco Shares, which included the IRS, the A, and a few other, but it did not include the U.S. Attorney's Office. That didn't do too well. Then in '79, they regrouped under Operation Greenback, Operation Greenback. And that one included the U.S. Attorney's Office. And then they started seeing which banks were getting some of these funds. And the one that they zeroed in was August of 1981. I think it was around August 20, 1981. They went in and raided two banks. One was Capital Bank, which headquarters was in North Bay Village. And the second one was Great American Bank in North Miami. Now, that bank, the one in North Bay Village, Capital Bank, which had also another branch in Brickell, they basically had this Colombian account who, at the time, I think when the account was frozen, was about $9 million. And they were known to the bank for years because the families, I think, were in the family that was behind this company were in the travel agency business in Colombia. And it was not illegal, saying they brought in the money. There were cambios. The bank, even I understand, charged for running the cash to put it into the account. They also were issuing cashier's checks, so the bank was making money on the float. So it was a pretty good account. Now, at the time, I think the owners of the bank were told by the federal authority, hey, the money you're getting is from these sources. So it was an ethical issue, not an illegal issue. What was required since 1970 for the banks was at any time that there was a transaction of more than $10,000 in cash, either in or out, the bank had to report it. And they did that. They were reporting that, so they couldn't do any. They could not find anything that were wrong. But it was now ethics. Do you want to deal with a customer that part of the money coming in comes
dirty
from
money
this?
or what have you? Yeah.
So anyway, so the bank said, look, I'm no law enforcement. If you tell me to close your account, I'll close your account. Now the second bank, Great American, there the people got wound up in jail. Why? Because they were submitting the forms. What the time was called 4789. That was the IRS form that had to be submitted. And they said that the depositor was Mickey Mouse.
So this actual fraud was taking
Well,
place.
it was saying it was a Colombian customer who was depositing the money, but I guess they wanted to protect the customer, whatever it was, but that was illegal. The moment you send a report to the government that is incomplete or is fraudulent or whatever, so the bank was fined about $750,000.
This is from Operation Greenback?
A result of Operation Greenback, yes. And so the bank subsequently was fined about, I think, $750,000, which was a lot of money back then, and then it was sold. So from then, you see, the Puerto compliance. Now, over the years, one of the things that we did for the FIBA was we started doing training in compliance. And we've got a very interesting relationship, but also with FIU, where since 2007, FIBA and FIU jointly, we certify professionals in anti-money laundering. And this was an announcement that was made by the time by Dean Jayson, with whom we worked the arrangement through Dr. Manuel Rusaki and I, who was the FIBA professor, because FIBA also has a named professor who happens to be right now Dr. Ed Lawrence, who is the chairman of the Department of Finance. And we made the arrangement agreement to certify this individual. I'm very proud to tell you, since I'm continue to be active and I'm chair of the education committee of FIBA, that we have certified about 9,000 people in about over 80 countries. When I first got the number, I said, there's got to be an error here. We're going to be involved in 80 countries. I said, no. It's correct. And we even have people certified in Africa. So this is so the FIU name is also all over the place. So this is one of those things where you have a cooperation between educational institution and a banking association, and we, for the benefit, because that also helps Miami clean up the unfortunate reputation we had as the one time the money laundering capital. But there are other areas that. So I say, if you want to launder money in Miami, I would say go somewhere else. Miami's not the place anymore.
It's where you spend your money, not invest.
You can invest it illegally. So one of the things that we realized is that people say, well, Miami was grew on London money. I said, the real estate grew on. I said, that's not true. Most of the money that for the years I came to Miami were from people who were from those original bankers. I want to say, hey, diversify yourself, build a nest egg, so in case you have to ever leave your country, you got something already over here. So talking about that money that was here going through the 90s into the early 2000s, we're talking about this housing boom and what's eventually building up to this 2008 crisis that affects various markets, various economies. But as far as here in South Florida is concerned, what were the notable trends leading up to 2008, and how did that eventually change? Well, I would say that if some of the Miami banks got into problems, like, for example, Bank United and all that, so because they were giving basically these adjustable rate mortgages to these individuals. I mean, I remember the management of the bank. I mean, these were, well experienced bankers. And I think what was happening there is that because of competition, they were trying to, get as many customers as possible. And since there were the securitization where they built all those that were being sold into the market, so that, and to a certain degree, and it's one of the things I cover in the classes, and Jayson knows this, is that unfortunately, the lending officers were getting paid by the number of loans they closed, not necessarily by the number of loans that were quality, that before the securitization process, they would have left in the bank's books. So now, close the loan, send it to the market, let it, become a
the incentive structure.
Yeah, right. So the bank was basically becoming liquid. We could make more loans because they were selling all these older loans. And the only thing the bank really cared was to get the fees from processing the monthly payments. So it was a non-interest income. It was a fee, and the risk, they didn't have the risk of the loan. So from a theoretical point of view, made sense, but it was who they were lending to. So they violated some of the basic tenets of banking for hundreds of years, which are the so-called 5 C's of credit. Any loan you give, you got to worry, number one, about the character. You got to worry about how much down payment they have, which is what we call the capital. Then it's the capacity to repay. As an individual making enough money to be able to pay the principal and interest on the loan and taxes and interest. I mean, principal, interest, taxes, and insurance. And also, they were making the loans based on the collateral, thinking the collateral, because the whole fallacy of the theory was that housing prices kept going up. And then, of course, once the bubble burst, all those houses prices went down. And one of the things that came up was the people that even could afford the mortgages. Why would they continue paying when they had before they had a house that was worth, let's say, $300,000, and now the house was worth $90,000? Why would they pay a large mortgage against it? So that was it was basically violations of basic banking, and for that we have Dodd-Frank legislation, which is an 848-page bill or law that now requires regulations. So it just once you break away from basics, sooner or later you pay a very dear price.
And before we get into sort of the cleanup afterwards, do you have any particularly insightful stories? Some horror stories that you might have seen in the lead up.
With the
the stuff you hear about the dog co-signing on the mortgage, or
well, personally, I didn't have any of those experiences because number one, we were very conservative in our lending.
Yeah.
So we
know your customer, right?
Know your customer, right? So plus second, our bank was more involved in international trade and all that more than in real estate, unless we did some real estate transactions. But we follow the standards of banking. I mean, it doesn't. If you follow those 5, you're in pretty good shape. You don't need that such extensive legislation.
Well, then, could you speak on the most important takeaways for our listeners about the impact of Dodd-Frank?
Well, that unfortunately, if we would have followed ethics and followed banking principles, we wouldn't have such a legislation that is affecting really the young starting families, because now it requires a lot more down payments, because now the banks have to protect themselves. So regulations, banks are, there's more scrutiny on the type of loans that we give. Hopefully things will get better for the youngers. Now in Miami, something has to happen, especially for this generation. Either housing pricing has to come down or salaries have to go up.
Those are two very difficult challenges that I think, especially in the last decade or so, given the different economic situations and global situations, these price fluctuations have definitely been impacting those two variables that you just mentioned. That being said, what role was the maybe government regulation going either to 2008 or post 2008 in helping kind of make these homes affordable real estate, less of a risk?
Well, the regulation from my perspective of banking was to basically clean up the mess of many of the banks. So many banks were merged. Yeah. Some banks were, liquidated. But it was basically, if you notice, very few banks were chartered since that time, new banks. So why would you charter a new bank when you got so many sick banks going on at the time? So what was happening was that the loans that they were sending to the market, the investment side of the bank was buying them, as a group of loans, and they were just time bombs.
And I guess just one more point on that is, particularly in regard to consumer protection and education, could you say the key lessons that we learned from the Great Recession?
The key lesson is don't be what is that word you say? Hogs go to slaughter.
When pigs go to slaughter.
Right. So you have to be ethical in your behavior. Right. And you have to. I think everybody has a right, and I happen to agree with the original policy of the federal government. Let every citizen, every resident of the United States afford a home. Let them feel they own something, right, of value. And we have to get back to those times, to those times. So, it's a shame that these things have happened because of greed.
And that concludes the 5th episode of the Panther Business Briefing and second part of our residential housing series. We'll conclude this series next week, where we continue our discussion with Professor Kerbel, as well as begin to introduce our next theme of artificial intelligence in the business world.